to our post-week market review. So keeping things short, sweet and simple. As you know, we obviously spoke about this last point of interest. This is our last topic, as we spoke about in our midweek technical analysis. So we will start from there. Obviously, you already know what's happened since market open. We saw price reject off of this level, continue on bearish until price found support at around the level of 3,885. And then since then, price continued on bullish, and we found resistance at this level that we marked in with this little green drawing here. You can also see these lines on these candlesticks. We established that price created a bearish engulfing pattern, and obviously the higher the time frame, the stronger the information. I would never tell or recommend any trader to base a trade off of a single confirmation, but it was a confirmation that we took into account off of analyzing price action and candlestick structure, and we established price was creating a bearish engulfing pattern. We have our A candlestick here, so that's sort of your starting candle. We have our B candlestick here, which is our engulfing candlestick, and engulfing means that the price of the secondary candlestick or the B candlestick has engulfed the previous candlestick's data. So you can see that all of this was basically engulfed or swallowed, or however you want to say it, by this single candlestick here. And then our C candlestick is our entry candlestick. So an opportunity right there could have been on the lower time frames, sort of sharpen up your entry, sharpen up your stop loss and whatnot, and then just target sort of the next point of interest, or even further if you really wanted to, for sort of a 1 to 2, anywhere from sort of a 1 to 2 to 1 to 5, depending on how your lower time frame analysis plays out as well. But as you can see, we saw that bearish engulfing pattern perform as it should, and price continued on bearish until we sort of found a support at around the level of 3,945. Obviously, price did sweep a little bit lower. Price created this low resting liquidity. Price came down to sweep that level of liquidity. Obviously, buyers that potentially were in the market in and around these sort of levels here. Price got pushed down, probably stopped a lot of traders out, and then price pushed up and created that initial bullish move. However, from there, you can see that price ended up continuing on bullish all the way up until we tested one of our points of interest that we established using our fixed range volume profile. I believe this was a value area high. It might be a value, yeah, I think yeah. So this is our point of control, this is our value area high, and this is our value area low, with this white line being the value area low for the previous consolidation that we marked in from last week. And as you can see, price came up to test that point as a resistance, and then price began to continue bearish, eventually finding support at this level consistently, and then obviously you can see price dropped back down and then finished at around 4,003 at market close. Obviously the market opens up again tonight at 10 p.m. GMT. So not long left now. I think we have what 4.5 hours, 4 hours 25 minutes until market open. So it'll be interesting to see what the market does upon market open. But there's a couple of things that could take place. There's not actually too much to go over in this post-week market review. This was our sort of midweek. This was the start of our midweek. We established this big bearish move, sort of over 3,000 pip move, and then the price has just sort of been consolidating and moving sideways within this overall area here. But where price is currently at, and if you remember from our midweek technical analysis, we spoke about that level of 4,000 being that sort of pivotal point, that psychological level amongst traders right now. And if we see price trading above that level of 4,000, we're going to accept that the market is bullish. And if price is trading below that level of 4,000, we're going to accept that price is moving bearish. However, we're not talking about sort of, if you see price now, it's at 4,003, we're 30 pips away from the level of 4,000 on the dot, but that does not mean we're now in a bullish market. Obviously, we need to see price move away from that level of 4,000 a considerable amount, potentially 500 to 600 pips. So we're talking, if it's on the upside and it's on a sort of bullish bias, then we're looking at around 4,050 to 4,060. Obviously, if it's a bearish bias, we're looking for sort of 3,950, 3,940 sort of type area to then really solidify our overall bias, whether that is going to be bearish or bullish. But I do believe, as we are still in this consolidation area, price will continue to move sideways for a little bit, especially upon market open, as there's not going to be an enormous amount of volume within the market. As you guys know, gold can be very volatile at random times throughout the night, throughout the day. So nothing can go sort of, we can't expect anything at 100% with complete certainty, because we could see the most volume ever for the last 2 years in this Asian session tonight, but you don't really know. But basing off of this current price action, this current candlestick structure, and what we've seen gold do these last couple of weeks, it is most likely the price is going to continue to consolidate. So like I said, if we are going to see that overall bullish bias or bearish bias be confirmed to us, we're going to need that 500 to 600 pip move away from that 4,000 level. And what would that look like? So we're testing at around 4,000 now. What we need to see upon market open or over the next few days is for price to push up and clear this previous high that was made just above our level of 4,045. If this price is cleared, we're then going to be looking at this level here that we have marked in at around 4,060. 4,060. Obviously, we have this point of control that we're going to decide. I've decided to keep this point of control in because it is definitely a potential level or a potential area that we could expect price to go into. So the last week's consolidation, which is here, obviously sort of after that midweek move happens, and price found that low, the same sort of thing as we saw here. So like, for example, you saw at the start of the week a complete bearish move, price found its low and then consolidated. At the start of the week we saw that enormous bearish move, price found its low and then consolidated. Obviously, if that pattern is to take place, we're gonna see gold just completely plummet again, potentially down to the sort of mid 3,000s. But the likelihood of a pattern carrying itself out consistently over gold is not very likely, as you all probably know that already. So let's just base off of sort of lower time frame, sort of less sort of lesser time frame. So obviously we're on the hourly time frame. Let's just sort of go over what we could potentially see up until sort of our midweek technical analysis. So obviously, if we see price continue bearish from this level, the next level we're going to be looking at is around 4,045. If we see this high broken through here, we're going to expect price to start consolidating in last week's consolidation area. If we see price break this or test this level that price is finished at, and we see price react as a resistance, then we're looking for price to clear this previous low at 3,972. And if price clears that level, we're going to expect either 3,940 to be the level of support, or our sort of lower level here of around 3,388, 89, 90 sort of vibe, where you see price found support after this bearish move at the start of this week. So a couple of moves that could take place, but I do think we're going to see a continued bit of consolidation for a little bit, perhaps potentially just sort of the start of tomorrow, until we sort of see that real volume and pick up throughout that New York session. But only time will tell, and obviously we can only sort of go over what we could potentially see right now with the market closed. So regarding a post-week market review, I think that's pretty much everything covered. I'll conclude it once again. Overall, last week we saw an enormous bearish move and then price consolidated. The same sort of pattern as we saw last week. Price continued on, probably saw an enormous bearish move. Price eventually found support at a low and then consolidated. We saw an enormous bearish move, not as big as this, but an enormous bearish move, carrying price all the way down, found its low and then consolidated. So there's a lot of potential here for a continuation of these patterns. We could see sort of this same pattern continue. We could see a bearish move, dropping price potentially down to this level here and then continuing on to consolidate. Same sort of thing we see here. But obviously, if we see price break into, if I sort of zoom out a little bit, and some traders will know what I'm doing here, we could potentially see price create that lower low, create lower highs, create that lower low, create lower highs, and then we could see price create a higher high. And if price sort of moves back into the last week's consolidation area, then we're going to expect price to have a enormous bullish move taking place at some point in the future, where price will create a new all-time high. But like I said, only time will tell. Next week is big on economic news. We have the non-farm payroll dropping on the Friday, and as you all know, NFP is not a nice news release, so I highly recommend not to be in the markets when that is taking place, unless you are an economic trader and you have that stuff down to a T. Then by all means, be my guest. Enjoy that volatility that you'll see in that non-farm payroll event. So I'm going to wrap this up here. That's been our post-week market review. As always, don't forget to like, comment, and subscribe. And if you haven't already, be sure to purchase a challenge account with us. We have accounts that start at $10,000 all the way up to $200,000. It's built by traders, made for traders, and we've made it as easy as we possibly can for you to have the actual opportunity to be able to trade a much larger capital. For me, I was in that place where at one point in my life, where you only really have maybe a few £100 or a few $100 or a few $1,000 or a few £1,000, and you can't really see real consistent profits. Then you end up risking more, and then your account ends up blowing because you want to see those big bucks, and you can't really do that, especially on even on a sort of $10,000 account. Risk 1%, risk 0.5%, you're risking $50 to $100. You have a 1 to 2 risk to reward. You take a couple trades a week, you're only really looking at 3 to 400 profit. But obviously, if you're trading those big boy accounts, 100k, 200k, etc., you're looking at 2%, 1% being a grand, or 1% being $2,000, and so on and so forth. And then your 1 to 2s aren't a couple $100, they're a couple $1,000 or $4,000 or whatever it may be. But if you are interested in getting funded, don't hesitate to reach out to us. You can email our support, you can message our bot inside Telegram, or simply if you just want to have a look at our website, have a look at the FAQ, and just go for it. By all means, be my guest. Make sure, if you haven't, join our Discord, because we drop promos inside of our Discord that will give you a good amount off of each challenge. So be sure to check that out too. But once again, that's been our post-week market review, and I will catch you in our midweek technical analysis video. Peace.